Good morning, good afternoon, good evening, ladies and gentlemen, wherever you are in the world. This presentation is from Pipoholics, and we are based in London, England. A little bit of background information on me. I've been a Forex trader since around 2010. Currently trade the Forex market as a full-time occupation. I'm the author of the international selling book, Investment, Economics and Risk. And after getting a degree in economics and maths, I have studied risk at master's degree level. It will be my pleasure to take you through this opportunity that we've spotted in Forex markets. If you would like similar setups to the one that you're about to see, then please follow us on Facebook, Twitter, Instagram, and subscribe to our YouTube channel, as sometimes what we do in the week is we will post updates on these trades. Before we get started in this week's analysis, just a quick recap on one of our trades from last week. We was saying that we wanted to sell this market. I believe that this was the latest bit of movement that we had, and we said that let the market tell us that it wants to fail at this resistance. We were saying that the market was trading nicely between top, bottom, and we said that we expected the market to fall maybe over the course of 3 to 4 days. If you haven't watched the video, you're a little bit late now, but you can watch back and see what we said about this market. We told you exactly how to sell it, and it gave us the setup that we wanted. We took the trade, we sold it all the way down, and we got out at support. The market broke support, and what we will be doing is we will be watching this market over the next week, because we believe that this market will go lower. But we cannot sell at a low price. So what we want is the market to rally up and let us have a high price to sell at. We will keep you updated on social media, and we'll probably do another video on YouTube when the time comes, so that if you did miss our analysis of last week, you should be able to still trade this with us, because we think that there is much more downside in this market, the US dollar against the Japanese yen. The focus of this presentation is going to be on the euro currency, and what I've got in front of you is the euro US dollar monthly chart. And the reason again why we use monthly charts is they give us an idea of direction, but also where the potent support and resistances are. And you can see this month's candle is on the underside of what should be quite strong resistance, because the market has respected this horizontal trend line for some time. However, if the market does break above, then there is another quite potent resistance as well that the market will have to get through. So it's going to be very interesting to see what happens between now and sort of summer 2018, because the market has one obstacle to get past, and if it does, it's going to run straight into another one, which makes me wonder how much further can the euro go against the US dollar. We would not go short this market, because if you look at the daily, there is nothing to suggest that this market should fall. The market has been putting in higher highs and higher lows, and you can see that the low came off the top of the recent high. If the market pulls back, I think this will be a strong area of support, and you may well get an upwards tick again. But the market that we are really interested in is the euro against the Swiss franc. If we show you what this looks like on the monthly chart, you can see that when the central bank abandoned the currency peg, there was a massive market reaction which caused a massive price gap. Ever since, this market has been rallying to fill that gap. The gap will be filled if the market gets to around 1.2. Now, this is significant, because that means that we have at least another 1,800 pips of upside movement to go in this market. I think that any weakness in this market is going to be seen as a buying opportunity, because the market knows that the gap will be filled. We're nearly there now. I think that people will continue to buy any weakness in the hope of selling at around 1.2. So when the gap is filled, or if the gap gets filled, it would not be the end of the world if the market came up to around this point and then just drifted down to test this trend line again, which would probably invite more balls into the market, and you'd have another test of 1.2. If we look at what's going on the daily chart for this market, because there's lots of traders out there that are trying to play hero, they're trying to catch tops of markets, and they're trying to predict what's happening in volatile markets such as the pound CAD. And this is such a gentle setup. We've been buying dips in this market for several weeks, and it's been probably the easiest money we've made for a long time, because there's just been a very nice gentle uptrend in this market, and there's a very clear target. If we go back to the monthly, there's not much in the way of resistance until we get to around that 1.2. So we expect this market to go up. Of course, there's going to be times like this where the market gets stuck underneath a resistance, but there should be enough buying pressure because enough people are waiting for this price to get to 1.2 before they really start heavily selling this market. So any weakness in this market should be seen as a buying opportunity. At the moment, the market is at a high price, so we don't want to be jumping in. What we'd like to see is the market come down to around 1.175, which will probably be a nice support for more bulls to come in and really propel this market higher. If we show you what this looks like on the hourly chart, you can clearly see that the market is it's too high to buy at the moment. Because the market moves in waves, if you jump in at this high price, there's a very good chance that the market could be ready to move against you, and you don't want that drawdown on your account. So the best thing to do is wait in, because waiting is very underrated. People don't realize that waiting is a massive part of trading. So let's wait for this trend line to break. If it does, let's see what happens around 1.175. There is support there. So if this market comes down, let's let it show us that it wants to hold this support, because if it doesn't, then the next tick down is going to be this trend line. And I would expect there to be a lot of buying pressure at that trend line. So we are basically going to wait, see what happens with this market. If it starts to show bullish signs and starts to break out around this price point here, we will be buying. If the market's still in a downtrend here, then we'll just hold off buying, wait for the market to come down to this trend line, and then we would expect the market to go up. But we're only going to buy when the market proves to us that it wants to go higher. And I think, again, this is probably the most underrated setup out there in Forex at the moment. So please keep an eye on this. If you want to see how we're doing, and we will be letting our followers on social media know when we're going to be buying this market. So if you don't have the time to watch the market, just follow us on Facebook, Twitter, Instagram, and we will be sending out alerts when we do start buying this market again.